Welcome back to another episode. I'm your host, Ryan Richards, a residential loan officer and real estate investor based out of Massachusetts and Rhode Island. Today I'm bringing another solo episode talking about the number one reason why people who start the real estate transaction get denied financing. If you're an agent or you're someone who wants to start the process and you want to avoid this issue, then this is the perfect show for you. The number one reason why people get denied financing usually comes down to one key principle, and that's communication. Typically on the lender's behalf, a lot of times when people get denied financing, it's a lack of due diligence on behalf of the lender. But you as a borrower, as a client, should keep this conversation in mind as you start to get pre-approved. Number one, you want to make sure your loan officer is asking you questions. Are they actually reviewing your application? Have they asked you about the bank statements? Did they collect your bank statements? If you feel like you got pre-approved by clicking a few buttons online, there's a pretty good chance that that pre-approval was not done thoroughly. You want to make sure that you're submitting your documents to your loan officer, that they requested them, right? If someone's going to be giving you $500,000, don't you think that there's a process to review your documents and review your financials? There absolutely is and should be. So make sure that when you're going through the process, your loan officer is requesting these documents to be reviewed and having a conversation with you about where you're getting your funds from. Are they in your bank account? I see you have X amount of dollars in your savings account. Is your deposit coming from there? Oh no, I'm planning to liquidate from my crypto account. Okay, glad we talked about it. Let's go through what that looks like. Here's the requirements that we're going to need. I just had one where a client submitted a bank statement, it had $50,000 in it, enough for the transaction. But I asked him, I said, hey, what's your plan for the down payment? Are you pulling it from the savings account you uploaded? He said, no, I'm pulling it from crypto. I said, okay, crypto's fine, but where's the crypto held? It wasn't with any online institution. You had it held offline, which I don't really know what that means, but I guess it's a super secure way to protect your crypto. But from the bank's perspective, we have no way to paper trail that. Crypto doesn't have account numbers. It's held in some, as far as I'm concerned, secret institution. I have no way to paper trail that. So I'm glad we had the conversation because we can actually take a few steps now to make sure that when you find your house, you have the funds sourced and documented the way we need to. But had we not had that conversation, all of a sudden come offer accepted, he would have had a $50,000 deposit in his bank account that we would have no ability to use. And it would have created a big problem. So having those conversations early are really important. Where are you planning to pull your money from? Are these all the assets you wanted to list on the application? Go through the declaration questions. I see you answered a couple of these questions here. Oh, looks like you do know the seller of the property. Oh yeah, it's my brother. Okay, well, that changes some of the financing options. So let's talk about that. If you're self-employed or using a program that needs tax returns, your loan officer should be asking you, have you filed this year's tax return? If so, do you owe taxes? Did you pay those taxes? Are you on a payment plan? Where do you stand with the IRS? Because federal taxes have to be paid. You have to pay your taxes to the government so that lenders feel comfortable lending on the house without a threat of a potential tax lien, right? We want to make sure your federal obligations are paid. But if you don't have those conversations, that might come up later in the process. And it does happen. So you want to make sure you're having these conversations with your loan officer. You should feel like you're not in an interview, but you should feel like you're sharing your story about your financial world with your loan officer. If you don't feel like that, there's a chance that there could be something in your profile that isn't a concern to you, but could be something that requires more documentation or changes the options for us. So have that communication. And not only at the beginning stage during the pre-approval, but as you're making offers, right? Your loan officer is part of your team. Make sure that they're informed about what's going on with the property. I've had clients who are submitting offers on the weekend, and before the weekend, I'll reach out and say, hey, if you need any numbers for this weekend, I'm available. Feel free to shoot me a text. If you have any questions, give me a call. If your loan officer doesn't do that and you don't feel like you can contact them, you might make an offer on a property that you don't qualify for, especially if you're looking at multifamily properties, because the amount of rent the property generates significantly changes the amount you're qualified for. So if you don't have that conversation with your loan officer, just because you have a piece of paper that says they'll give you $600,000 doesn't mean it applies in every circumstance. So reach out to your lender, have that conversation. Hey, I'm looking at this property. Can you make sure it works for me and my numbers? Okay, great. Can you make sure my payment's still in line with what I'm looking for? Because the taxes are higher on this property. But that conversation starts early from your lender by saying, hey, these are the things that can change with your approval. These are the few reasons numbers can move. Taxes, insurance, rates depending on the property type, etc. So you want to make sure you're having this dialogue with your loan officer. And in a similar fashion, making sure that you're talking to them about any potential changes you're going to make to your finances during the process. Are you going to be taking out another loan? Do you need a new car? Are you going to finance the couch for the house, right? These things impact what you qualify for. So having that conversation, having that dialogue, and asking them questions as well. Did you submit my file for an automated underwriting approval? I just had one recently. File came from another lender. They denied them financing 2 days before closing. Deal comes to me. Can you figure out a solution? Unfortunately, I wasn't able to because the lender who gave the pre-approval never took that step. And ultimately, these clients should have never been approved for financing in the beginning. But had they taken the step to do that, they would have figured out months ago they could have made a plan to fix their credit and their finances so they were ready to buy. But now it's too late. They're under contract. We only have 2 weeks to make something happen. It's not enough time to figure it out. So again, having this dialogue with your lender, just try to get a feel for what level of due diligence they've done to validate your approval and ask them questions. Is there anything I should be aware of over the next 3 months of me looking for a house? Anything I should avoid? Anything I should do? And that's where you'll start to have these conversations and these dialogues. So that's by far the most common reason at its core. As a side note, for anyone who's looking at buying a condo, condos do have the potential to be denied financing. Aside from you as the borrower, you could have A+ credit, you could have large down payment, great income, but mortgage companies may deny you for the condo project's eligibility. So typically condominiums have to meet some sort of minimum criteria, whether that's potentially how the associations run. Do they have a budget that allocates for reserves? And do they have enough money to pay for the upcoming expenses? That could be, are there any environmental risks in the complex? I just had one where there was. They were dealing with a massive environmental cleanup, and that's potentially a problem for lenders, right? It can affect the sustainability and ultimately the resale value of these properties. So as you're looking at condos, you want to make sure that you try to get as much information as you can about the complex over to your lender as soon as possible so we can start to vet out some of these potential concerns. Of course, we have lots of programs that are very flexible on these condos, on the criteria that they have, but you really want to make sure that if you're looking at condos, you have a conversation with your lender ahead of time about what types of red flags you should look for, connect them with your real estate agent to make sure you can collaborate and try to figure out strategies to these potential challenges. As always, if you have questions about getting pre-approved, how to start the process, or feel like your lender might fall into this category, reach out to me and I'd be happy to help. Thanks for watching.